Hey traders, welcome to Charts and Coffee. Happy Thursday, everybody. Hope everyone's doing great. We have, we talked about this Tuesday. Downtrend. It's not good, it's not bad, it's just bearish. And here we are. I want to remind everybody of a few things because one of the questions we will inevitably start to have in our minds, because the pig in the head wants to know, we all have a pig in the head, and that is, where is the bottom? That would be just a bad place to start in terms of the questions that we want to ask about this particular market. Until the NASDAQ, and maybe even more specifically, the XLK wants to shift to a neutral trend, that is the second trade flag or the lower row of the multi-trend, until it wants to go neutral, yellow. I color code everything. I've been wearing glasses since the 4th grade. A lot of folks ask, Rog, why with the lines and the color coding and the automation? I just don't see well. And I'm pretty sure I'm not alone. And what it's forced me to do throughout my career is just make things automated and blatantly obvious. Dots, lines, colors. So I don't miss things. The great thing about that, the byproduct of that, is I'm just aligning colors. I'm just counting dots, numbers and patterns. That's our life. And so what do we have here? We have a pattern. We have a set of numbers. We have a structure that's indicating the path of least resistance is down. Again, don't fight it. I find traders looking at downtrends are like those poor souls every now and then that are trying to run up the down escalator. And I'll tell you this, if it's only a couple steps, they make it. There's not that much ground to make. But imagine you're trying to do that a quarter of the way down, a third of the way down, halfway down. Usually that escalator is going to win. The more established the downtrend is, the further you are down that escalator trying to run up against it. So why not just let the escalator take you where it's going to go? See what's on that floor. That means we're going to get opportunistic to the downside. And that's okay, because I am actually rooting for the bulls to have a session or 3 of strength, because that is short the rip. I get a lot of questions about buy the dip and short the rip, right? Where is buy the dip working? This is natural gas or UNG. Double green, bullish momentum, bullish trend, green over green on the multi-trend, green grab candles dominating this daily time frame. Let's move this over here. Dominating that daily time frame. That's where you buy the dip, gang. Structure first. Structure dictates strategy. Now I'll go from NG to NQ. It's just the opposite, right? Where it was green, it's red. Where it was looking up, it's down. This is sell the rip. Both of those, buy the dip and sell the rip, are trend trading strategies. And trend trading means we first identify, is there a trend, right? That makes sense, doesn't it? Okay, so as always, gang, thanks for joining us for Charts and Coffee. Let's caffeinate and dominate. Let's jump into your questions. Starting off, Danny asks, what are my thoughts on COP? Sure. All right, COP. Let's take a look. Now, think about, in terms of anytime you're pulling up an individual stock, who's it hanging out with, right? Who are its buddies? Who are its friends? So COP takes me to XOP, XLE, OIH, that group. Now, it's not in the OIH. It is in XOP. I believe it's lower weighted within XLE. My question is always this. My thing is outperformance. Is this the best example of an uptrend in any of those groups where it is included? And I'd have to say probably not. I think MPC looks better, VLO, CTRA. But if the tide is going to go up, and if XOP and or XLE are going to stage some kind of rally, then a rising tide tends to lift all, if not most, boats. So you take a look at XLE, there's your COP. Danny, MPC, VLO, even WMB is borderline looking better. No red grab candles, right? No red. Occidental, keep an eye on that. But it's in the group. It's in the group. So my thoughts are, let's start at the watch list building level and go from there. All right. All right. Next question is about, well, kind of the same conversation. We're going into CTRA. And we did have a trade in CTRA the other day. And we went from the entry to the target at the same day, at the T1, we want to scale out of half the position. Now, is this a problem? Well, the cool thing about CTRA, Tim, it's still looking like a fantastic relative outperformer. It's still looking like a great relative outperformer. And ultimately what that means is we'll probably look for another entry. Sometimes markets make sudden moves, hit our target. And, why do we have our targets where we have them? Let me show you this, everyone. 3105 was our high yesterday. Our target was 10 cents or 15 cents in front of that. So, we never know how quickly a market's going to move. We just know where our targets are going to be. In this case, it just happened to have made a pretty dramatic move from our entry on the 10th to the very next day, hitting T1. Very high chance, Tim, that I'm going to be setting that one up again. Likely today. It's on the, I've got my journal out here, and I'm taking a look at the list of names that I want to enter. IEF, maybe even TLT, Alan, to your point. IEF, CTRA, when I look at what it is that I want to do, they're on the journal. And as far as TLT, it's not quite at, well, so if I'm going to set up TLT, gang, I'm going to set up ZB, and that's at the 21 propulsion. For IEF, I'm setting up ZN. So ZB hit the 21, ZN hit the 21 yesterday, and it's hitting the wave today. So I'm going to complete the remainder of our trade on ZN. So if you're in the futures room or my Sector Secrets Mastery, in about 20 minutes, you're going to start seeing that I'm going to be sending out some alerts, lines, levels, where we're going to scale in these two. Now, whether traders want to go the futures route, futures options route, or puts on IEF or TLT, I'm looking to complete the trade. Now, when I say complete the trade, what do I mean? What I teach is scaling in, right? A lot of traders, I think in the 80s and 90s, scaling in and scaling out was really pretty much sort of the de facto way most traders looked at the market. And I hear now less of that. Markets have turned into buy at A, sell at B, and you're flat. That's not really the way that I was taught. I scale in, I scale out. And I think scaling is probably going to start to make a resurgence, especially in CHOP, with more volatility, more elastic zones. I think we're going to find a lot of traders embracing the ways that, I think a lot of 80s and 90s traders embraced, which is scaling in, scaling out, not having a singular level of getting in and a singular level of getting out. I don't know when that really started to gain a lot of popularity. I've never embraced that approach. So what that means is for us, I look at IEF and I see a zone. I see an area where there could be a shift in the momentum and sentiment. And in that zone, we very tactically deploy specific percentages of our capital that is budgeted to that trade. This is my money management and risk management guideline. We deploy a certain amount of capital at each level and slowly build the trade. And that's where we are today. So I'm looking really forward to that. And I hope we continue to move up a little bit higher. That bullish momentum is going to be imperative to our building the trade in either one of those. Choose your adventure. You want to go the IEF route. The options chain is liquid. You want to go the ZB, ZN route. Those futures contracts are great. All right, moving on to, I read the 1, 2, 3. Yeah, Michael, Trish did a fantastic job in that. Trish has been studying my trading, creating my content, my classes for almost 10 years now. So I can't take too much credit. Got to give credit to Dow because it's his pattern, and Trish, it's her article. I'm glad you read it. I'm very glad. Does the VIX potentially have a 1, 2, 3 reversal setting up? The VX, cool question, Michael. I think it's really overbought, oversold. I think we're really talking about an overbought, oversold conversation here. Let's zoom in a little bit. Every one of the purple or yellow lines that you see on this chart at the upper and lower edge, those are DARVI. They're Darvis levels. Automatic, Darvis 2.0 or 3.0. What's the difference? 2.0 is free. Always has been. There's a number of free tools that I have made available for many, many years, and automated support and resistance is a heck of a needle mover. And so the Darvis 2.0 is available over at countdowntrader.com. I use it for intraday trading. I use it for end of day trading. It's going to work on any time frame. That's what those lines are drawn on. I think we're sitting at an overbought zone. Why do I say that? Well, we don't have an uptrend yet. We are sitting at the overbought levels of my stochastic here. We have a nice set of Darvis levels showing where that resistance upper edge is sitting. So neutral plus range, defined by the Darvis, is really overbought. The only thing I can do here, Michael, where we are right now, 32.8, is shop puts on, say, the X or whatever, however you want to trade the VIX. And then if we go double green, which we're not, if we go green momentum, green trend, at that point, I would look to buy the dip. But this is not buy the dip yet. This is not buy the dip yet. As far as a 1, 2, 3, I would not look at this as a 1, 2, 3, quite frankly, because the Darvis has a habit of just sort of hanging out in this area. I know a lot of folks are wondering, do we shoot up to, I'm sure there's a lot of numbers out there where traders have said, hey, we're going to 36 or 40 or whatever, crystal ball, guesswork, hyperbole, clickbait type analysis. That stuff makes me crazy. Let's just go to where we've been before, see what the market structure is, and then we'll determine whether that is actually a go point or a no point, right? And then I'll make a decision. I really can't crystal ball from here. Nobody can. And so I'll just keep an eye on where we have stalled out before within the context of the trend. This should really contain the zone. And again, I'm looking at these Darvis level. So I'm not by the dip quite yet. I'm really not there yet. Okay, what causes the IEF to go up or down? The ZN mark, the ZN 10-year note is what it's tethered to. All right, good morning. Looking at a 4-hour US. Okay, Mark, that's colorful visual. Okay, moving on. Janelle, what are your thoughts on XHB? Mark, that's kind of obnoxious, actually. Yeah, I don't appreciate that. That's not my vibe at all. I appreciate you looking at the Euro US though. Looking at XHB, beautiful downtrend, Janelle. What are my thoughts here? Let's short the rip, right? Double red right now. It's been vacillating, right? We go from neutral to red, neutral to red. I do like the wave. Look at how the waves can, even if the grab candle goes green, think about what XHB, ITB, the stocks within them are going to do as rates continue to go higher, right? So if we take a look at the way in which we're moving lower, right? At the way at which we're moving lower, I think ultimately being south of the 200 propulsion, bearish hemisphere, finding resistance in the wave, right? That's great resistance that we can short into. And that's what I think that's going to be great timing to buy puts. But right now, Janelle, we're not closing that chasm. We're not closing that distance. And so that's where we want to think about, hey, let's be patient. Yes, it's moving lower, but this is what's so difficult about trend trading, waiting for that pitch in our zone. So I know a lot of traders will want to chase that lower, and sometimes that works, but I'd rather wait for this kind of opportunity, and we've taken advantage of this before. So I'm really, in fairness, I'm really talking my book here. Um, XHB looks far better than ITB in terms of the follow through. The big difference between XHB and ITB, they share a lot of the same individual stocks, but the weighting is entirely different. So, what do I mean by that? You know what? Let's dive into that just for a moment, because this is very much at the heart of a lot of what I do in my mastery, which is, do we know what we're trading? Do we know how they behave? And a part of the how is oftentimes, there we go. Take a look at the holdings. Look at the sorry, that's IEF. No, I want to compare. Sorry. Let's try that again, shall we? I want to compare ITB. There we go. Do XHB. Take a look. ITB on the left, XHB on the right. Look at the different weighting. Isn't it interesting that ITB, XHB, a lot of the same names, Toll Brothers, a lot of the same weighted stocks, but look at the weighting. This is what a high concentration weighting looks like. That's on the left on your screen. The right is not a high concentration weighted ETF. So when we take a look at ITB versus XHB, it's actually the I'm going to double check. Yeah, I'd say they're actually moving pretty close. Yeah, they're actually looking pretty close. But notice that one's high concentration weighted, one's not. You might say, okay, Rog, what's the point? How would I use this information? The way we use this information is XHB, it's going to be more difficult to determine what is dragging that sector lower. ITB, it's going to be pretty easy. Look at the fact that your top 3 stocks, look at this. It's almost 30% of the weighting of the ITB. While it takes a whole lot more individual names to sort of sync up and move this market lower. So if they're both moving lower, that's actually a really good sign of an excellent trend. But if I'm going to choose to usually trade an individual ETF, the high concentration weighting gives us traders a really good opportunity to take advantage of a little bit more obvious a catalyst for movement. I hope that helps and makes sense. Great question. All right, moving on. How are we on time? Okay, I think we're good. Let's see here. Bear with me. Hang on. Oh, I lost my place. So we got COP. Sorry, gang, I lost my place on the questions here. IYC. I don't know that I have an IYC build out. Let's go take a look. I think I have that one. Because when I do consumer discretionary, I'm a little bit more XLY. And the volume is Y. Michael, see this? That's not really going to be, for me, that's not going to be the best way to look at consumer discretionary. I'm going to go where the volume is. The volume does mean that the individual stocks within it are influenced by this group. So we're probably 6 of one, half dozen the other. But I like the downside here. Really, McDonald's and Booking, Target, and TJ Maxx. Those are neutral, but I believe all of them but McDonald's are either below, or McDonald's is just at that 200. Take your pick. If we get a rip, Michael, that's where we want to focus. All right. That's where we want to focus. Cool. All right. So that is our morning, gang. Thanks as always for joining us for Charts and Coffee. Thank you for the questions. And I will see you tomorrow. Same time, same station. All right. Be good to each other, gang.